Hello everyone, welcome back to the Monopolistic Investor. And today we'll be taking a look at Uber earnings that just were reported yesterday. We'll be taking a look what is going on with this company, what are their really great collaborations, how much it grew, and what I think of it after the earnings, and how that impacts my portfolio. Okay, so first of all, starting off, we'll be looking at their prepared remarks, which they posted before their earnings call, but I used some of the information from the earnings call in order to get you a really full summary of what happened. So, let's start off with looking at those graphs. So, Uber reported their Q1 2025 earnings, and just based off that, they mentioned how their customers grew 14% year over year to monthly active customers, 170 million customers. And that is a huge thing. They are also said that this growth doesn't come from prices alone. We should consider also the engagement and frequency that their customers are doing when using their platform. So they are also collaborating with Waymo in Austin to bring driverless vehicles to the Uber app. They have 100 AI-controlled cars on their offer. They have also acquired Trendyol Go in Turkey to make their entry into Turkey easier. While that is positive, I do think that because of one company called Kaspi.kz, I made an article on it just yesterday. Kaspi has bought out a company called Hepsi Burada, which is an e-commerce website. Why am I saying this? Well, as it just happens, Kaspi has a division in its business because they have a super app which makes many things. They are also engaged in the e-grocery business. While that is a bit similar to Uber Eats, Kaspi is a bit more than that. They also provide the actual food. So it's similar, it's not the same, but I'm just saying that Uber could have some competition from Kaspi in the future in Turkey, just so you know it. I don't think they are a danger now, but it's good to keep an eye on that. So, as we go over to these earnings, we shouldn't forget about their mobility segment, which is something that is the majority of their company. So, their customers grew. I think it should be somewhere here because I got that from the earnings call. Where is it? Yes, gross bookings. I don't think that's this. Freight. Sorry, let me just. Okay, they don't show it here, but it doesn't matter. Oh, okay. Yes, they have it. I think. No, wait, that's 17%. Okay. I'm just going to tell you that their mobility segment delivered 19% year over year, third consecutive quarter trip growth. So that means that 19% more people are using their mobility segment. That is a huge number of people. Many people are overlooking this. And they are also doing something which Amazon executes really well, and that is to keep prices as low as possible. Why that is the correct approach, according to them? Well, it's because they believe that engagement and frequency in their audience is better than just raising prices, and that is going to maximize long-term free cash flow per share generation. So you can see that they have a long-term view. That is good for us as value investors. One of the potential opportunities that Uber has noticed is the lack of presence in the outskirts of cities. That is Uber Reserve. That is where Uber Reserve comes in. Uber Reserve is supposed to be the solution to that. And for those of you that don't know what is Uber Reserve, it's basically a way of booking a ride up to 90 days in advance, or at least 15 to 30 minutes in advance. Why is this useful? Well, Uber noticed that 40% of the rides that aren't connected to airport travel on this Uber Reserve platform, which means people use that for things like getting to school or to your grandmother, etc. So here we have some information that on UberX, that is something special. That is, their taxis, and you can see in Poland it's also growing. You can see I live in Poland, so I can tell you that yes, almost every time I go outside I see a Uber car. I also, even if I go through my nearby area, I see some Uber cars being parked nearby. So many people are doing this as a side hustle, and I'm very happy for them. Many investors, of course, were looking at the mobility segment, but their delivery, in their opinion, is an underappreciated growth and profitability machine. So, they steadily accelerated to 13% year-over-year growth in 2024 and grew to 15% this quarter, all organically. So, they are investing into their business. They aren't doing acquisitions to power that. They are doing it all through making use of their pricing power and product offerings. That is good, in my opinion. Oh yes, one other thing is the fact that they are expanding Uber Shuttle to more airports in the US. If you don't know what that is, I think this quick video from Uber themselves will make it easier for you to understand. Let's look over it. It's 30 seconds.
ऊपर पे सीट बुकिंग
क्या ऐश का जमाना है अपने स्ट्रगल के टाइम पे ना बस के अंदर घुसने से बाहर निकलने तक मालूम नहीं कि हाथ सलामत या पैर सलामत सीट पकड़ने के चक्कर में धक्कम धुक्की धावा धूबी उससे अपन सॉलिड बनाए मालूम है
अभी नहीं चाहिए आपको धक्का मुक्की आबादूबी
स्ट्रगल का जमाना गया बड़ा ऐश का जमाना है गुड़गांव आए ना तो उठाना
Uber Shuttle, no struggle.
Okay, so that was a funny description of what Uber Shuttle is. It's actually quite simple. You just reserve a spot at their most convenient shuttle, and then you enter a pickup and drop-off location and select the shuttle option. Now, track your shuttle to board just in time. Arrive at least 5 minutes early. And, it's useful for when many people are going to the same place at a given time. For example, going to some airports. That is useful because you are paying less, and it even says free for somehow. I don't know how is it possible. Maybe it's just a free option for the first user or something like that. Okay, so coming back, I thought you enjoyed that video. I found it just today. And going back into their delivery, they are also fulfilling over 2 billion orders in roughly 30 countries with category-leading positions in 8 of our top 10 markets. I can say that when I worked in McDonald's during the past summer vacation, I can say with pure confidence that many people who were drivers and went with those boxes, that they were on their backs, well, many of them, even though they had Glovo written on them or something else, many of them actually were from Uber, because I saw on this little screen that a cashier has, when it printed out this receipt, it said Uber, I really like that. And I was an investor in Uber, so that made me happy as well. And why is this segment so important? Well, their leadership position means that they are now profitable. many companies don't have this. Uber's platform gives them a unique acquisition, engagement, and retention advantage for consumers, couriers, and merchants. Nearly a third of new Uber Eats customers came from the Uber app. So you can see that they have an ability to upsell their products to their existing customers which are using, for example, the Uber ride sharing app. So you know, that is a positive thing. Membership, which is also something that they have introduced, 60% of that drives the delivery gross bookings, and there's still room to grow. And membership drives multiple long-term benefits to Uber. They spend more and they are more likely to try new services that they introduce. And you know, that is a standard on-demand delivery for consumers. They like it. They expect everything to be at their doorstep in just a few hours or minutes, you know. And also their recent collaboration with where is it? Here, the Home Depot, 1-800flowers.com. The Home Depot, you know, delivery from those stores. Well, that's positive. Many people like using those. They are also collaborating with Instacart, OpenTable, and Toast. Toast is a company which is engaged in special payment software which is for restaurants. I will just show you this place where it happens, and then list of their partnerships. Where is it? I think it's somewhere here. Wait a second. I think it was near the... Oh yes, here it is. So we can see many companies are collaborating with them. Instacart, Delta Airlines, Marriott Hotel, Revolut, even them, you know. Bring, I have no idea what those companies are, but we can see last mile logistics. That is important. As you can see, as we all know, those who know, the last mile of shipment is the most expensive. So I think they want to get rid of that by partnering up with some other companies to focus more on the between the customer delivery. But we will see what they will do. Square is also their partner, and Klarna, buy now pay later company. I think it even wants to IPO this year, or it has. I have no idea. I don't remember exactly. T-Mobile, a telecom company. I don't like them. Okay, so that is boring. What do we have here? Delivery highlights. Okay, gross bookings are growing. Constant currency growth year over year. Blah blah blah. Freight out highlights. We can see that their freight is actually contracting 1% year over year. But I'm not really looking at this. Okay, so we have the consolidated balance sheets and all of that. Let's come back to this text. They're advertising. Advertising had yet another strong quarter, with revenue crossing a 1.5 billion annual run rate, growing over 60% year over year. And you know, that is the case with software companies. They can do something all at once and have many different aspects of their business grow all at once. So I'm very happy for that. So, you know, everyone is advertising on that. And they're also confident in the way that autonomous vehicle technology is the single greatest opportunity ahead for Uber. You know, many people think that Tesla is going to kill Uber in terms of that. Well, guess what? Waymo is already doing 250,000 paid rides every week, I think, or was it month? I'm not sure, but something, I think it was week actually. And you know, they are already testing that. Whereas Tesla, which is supposed to be the killer of Waymo, hasn't done a single paid ride completely controlled by artificial intelligence. So their Tesla, how do we call that? Robotaxi business isn't even available. And we want to invest in companies which are actually making money of that as of now. And we can see that Uber is collaborating with Google, because Waymo is Google, small division, which doesn't even affect their whole company as a whole, really. So It's like a small experiment, and it's already making money. And those 100 vehicles that they have in Austin are now busier than over 99% of all drivers in Austin in terms of completed trips per day. So you can see that those autonomous vehicles are more efficient than actual human drivers. While I do think that this will grow at some point, I'm not concerned about the fact that some people might worry about losing their jobs. Let me just tell you that people will still want to drive a normal person, not with a robot. As in, you can talk with them, you can get to know new people. So I think that it won't be eliminated completely. I think Uber understands that. And so, outside of the mobility, they want to expand autonomous deliveries to more US cities, such as Coco, which is a robotic company, I think, in Chicago and Miami, Surf in Miami and Dallas, and Upright in Jersey City. While it's still early, sidewalk robots are already creating savings for consumers while delighting passerby. Oh yes, some people are standing on the sidewalk and saying to their children, "Oh, look at this! What is that? That's a robot!" And those children, I think, are going crazy that they see a robot, and many people like that. And Uber Freight marks a major milestone this past week, partnering with Aurora to deploy a fully autonomous freight trip on public roads with no safety driver. Now that is a great thing. You have companies like Cisco, which I once did an article on, which is for the delivery of food. They are a food distribution network, the largest in the world actually, and they have over 204 warehouses in the US. And they deliver to businesses, schools, restaurants, all of that. And they have a really low profit margin. That is because the fleet is an expensive thing to manage. Buying new vehicles, training drivers, or even paying them. So I think that Uber Freight might be of some use for example, a company such as Cisco, not to be confused with Cisco, which is a security company. No, I'm talking about Cisco, the largest distributor of food and food-related equipment in the world. Yes, so that is good. We shouldn't forget about Uber Freight. I guess that many companies can benefit from that. Uber might make a lot of money from that. You have also companies like Amazon. You also have small business owners wanting to buy something off the internet and have it delivered, a huge shipment. The possibilities are endless. And so, here we can see that their profit leverage of adjusted EBITDA, earnings before interest, taxes, depreciation and amortization, up 35% year over year on a reported basis. So the adjusted EBITDA, so what they are earning before they count many costs off, is growing 35% year over year. And people are still, doing something. They missed their revenue by some percentage. When I saw that they exceeded their earnings per share by I think 10 cents or something like that, but missed on the revenue by 100 million, the stock went down. I'm really not sure why are people, so, focused on the outlook, it's just obvious that this company has many levers to pull. Of course, this isn't meant to be financial advice. Don't take it as one, because I know YouTube really cares about that. Don't worry, this is not financial advice. Based on their quarter-to-date trends, they expect Q2 gross bookings of 45 to 47 billion, represent growth of 16 to 20% year over year on a constant currency basis. So that means that I think it's if they take away all the foreign exchange impacts and just take that money as it is, they convert it to all USD. Yes, they also assume a roughly 1.5 percentage point currency headwind, so they are accounting for some headwinds in the currency. But overall, it's quite a positive report. And if we just go to my website for stock analysis, let me just sign into it quickly, because I will just show you how their financial health looks like, and many other things. Let me just go here, more stock data information. So now we wait a bit as my program fetches the data. Yes, here we have many important metrics. For example, we look at the net equity. It's positive. Net cash is negative. I think it's because of the recent acquisition, although I'm not sure about. But they have a gross margin of 34%. I guess that could improve over time as they have more robotaxis. While you have some companies here, my program fetches that from many sources. Well, it's not always the best choice of companies. You have something like Meli, Relics, and PDD, Pinduoduo. Funny name. Those aren't really their competitors, so it's not always correct, but it gives you an overview. However, for example, Dash, which is DoorDash, it has terrible efficiency metrics compared to Uber. Uber is above the median on its equity a lot. Yes, Alibaba. Well, don't look at it. It's not similar to that. Uber is here. Pinduoduo also isn't that. Well, if we were to cross out many companies, Uber still has a market share. Well, it's not the best chart, but from what I just wanted to tell you, I think they are the largest provider of such services. And that is that for the earnings. Here we have some consolidated financial highlights. I don't think you find it too useful. Well, it is useful, maybe not too interesting to say in a YouTube video. But 20% gross bookings, constant currency growth, really positive. I like this. So that is what happened. Here we can see some news under earnings call. Yes, but that is that for Uber. Really positive. We can also look at the valuation here in our app. And if we just take a look at the amount of revenue that they grew quarter over quarter, I don't think this will be the newest one, although we'll see. You can see that the revenue growth has been pretty stable now at about 10 to 15% to 20% year over year on a quarterly basis. So even based on that, if we assume a 4% revenue growth rate, my discounted cash flow says that they are worth this much. Now, whether they are worth $222.06, well, it depends on whether they meet those expectations and many other factors which I don't control, so this isn't financial advice. We can also look at the Graham valuation. The classic version thinks that because of the recent earnings per share growth of 422%, I think it's because of the recent buybacks, it thinks it's worth $3,586. While that is true for some people, I'm not sure whether that is actually true. If we look at the revised, it cuts that in half, basically $1,811. Remember, this isn't financial advice. Always do your own research. They might be worth zero, but I don't think so. So that is that. Actually, the effect this had on my portfolio is quite interesting. Those of you who subscribe to my newsletter under paid subscribers got to know first that I bought before their earnings call. I bought them. Let me just zoom in over here. I bought their shares when they cost $85.41. Right now, they cost $84. So actually I was a bit down because of that. It dropped like a stone because of, missed revenue expectations by 100 million. That is just silly. I don't think that we should focus on what analysts say. Analysts aren't the company, and the report was just fabulous, as you could just see. I'm really positive on this company. It's stupid that some people react in this way, but it's the stock market. Sometimes, irrationality kicks in. So I'm still up on this. It's actually my biggest portfolio allocation as of today, 11.18% by actual weight. I have many other companies. And the funniest thing is that Duolingo introduced chess. And they reported some earnings. I think it was somewhere here, I think. Look what happened. They went up to $500. Now, whether that is a good valuation is another thing, but compared to companies like Palantir, which have price to sales of I think 100 compared to Duolingo's 27, it just isn't comparable. 70% up in the past month. They introduced chess. I tried it out and actually I got hooked in. I like playing chess, although I haven't played much recently. And so the recent addition of chess is also something which I really like. So maybe I'll buy it at some point. Also, companies that I consider buying are as follows. I think Uber is worth buying. Alphabet, it also dropped like a stone at some point. Look, because of Apple saying that they will develop a browser that is connected with artificial intelligence. Based on that, Google stock down, $151. I personally think that's not correct. If we go to my tool over here and we click on Google, let me just go on to the stock valuation. I personally think that Google is a really great company. Look, they have positive net equity and net cash positions. Compared to other companies such as Palantir, Shopify, CrowdStrike, App, well, maybe not App, but Snowflake and Team and Electronic Arts, the expensive games company, they are just fabulous, Maybe those aren't their exact competitors, but you know what I mean. They are a really high quality company. This isn't financial advice. Investing is risky. I personally think that Google is a very diversified business. They own many different businesses, including Waymo, which I just mentioned. So personally, I'm not worried about Google at all. The only thing that might be a bit worrying is the possible divestiture of Google Chrome. Many companies, including OpenAI, I think, want to buy Google Chrome from them. Now, I'll still hold this company no matter what happens, because I still believe in their intrinsic value being higher than what they're worth. Remember, I only believe that. I don't have to be right. ASML is a company that is a monopoly in terms of lithography machines. And let me just tell you that it's all over the place over the past year, reaching a point of $605. One of the lowest points which you could buy in the recent history. I personally think that this company is great. They have virtually no competition. One of the other companies I bought recently was Adobe. I have now 0.5 shares of them, so I can't vote yet, but we'll do that soon, I think, maybe. Now, another company which I think is going to be a buy is Starbucks. With the recent change of the CEO and, some of its business being dwindled a bit, because we are seeing some losses in terms of their customers. Now, I personally think that Starbucks is still good because, it's just a premium quality coffee making company. I personally think that if you are a business owner and you're in a meeting, you basically go to either Starbucks or McDonald's or some low quality coffee shop. No, you would go to Starbucks, I think. Well, also Mondelez is a great company, down significantly because of rising cocoa costs. But you know, who doesn't like Oreo or Milka? You know, those are really high quality products. So this is my overview. And you know, for those of you that don't know, you can get a 30-day trial free, completely free, with my Market Vision website. You can try it out, €9 a month, and you know, you could access it and just say no, I don't want to do it. Well, if you access that, you will also have access to my Substack, my premium offering, so you could unlock something like this or this, you know, companies which many people haven't heard about. You could unlock those articles for free for 30 days. See what you think, let me know. Tell me whether you think €9 a month is worth it. And you know, that is all. I don't advertise other companies other than things that I think are valuable in and of itself. So thank you very much, guys. I'm an entrepreneur, 17 years old, investor, and I wish you all the best. This isn't financial advice. Thank you very much for watching this video. Have a nice day.